Stan's first idea is Amazon.com.
Thanks, Andy. Yeah, obviously, an internet giant with about $520 billion US in projected 2022 revenues. Amazon continues to be the undisputed leader in e-commerce and cloud services. The shares are down about 40% from the November highs. I think that's a pretty compelling opportunity for long-term prudent investors. Certainly, we're seeing some weakness in the e-commerce space in terms of growth. They may continue to struggle for the next quarter or two due to inflationary pressures and some of the post-lockdown resurgence in physical stores or people wanting to get out and go to physical stores. But if you look at Amazon's cloud business, AWS, Amazon Web Services, that segment continues to gain significant traction. It's only a portion of their overall revenue, but it represents almost 100% of their operating profits. AWS now enjoys about 1/3 of the world's total market share in cloud infrastructure, which is pretty telling. That's larger than the next two competitors, Microsoft and Google. We saw some good news coming out of Microsoft yesterday on the cloud business and the resiliency of the cloud infrastructure business. Adding to that, you see the high margin advertising business that with Amazon that continues to scale. When you click on Amazon and you see a top product and it says ad, that's continuing to grow. That's our advertising business. Prime membership has continued to grow. It's doubled worldwide to over 200 million paying members since 2018. And that's just a source of annuitized revenue for Amazon. You add into things some of their hardware devices. You add into things such as their Prime Video, Prime Music. Some of the parts, I think the shares are definitely worth more than where they are today. And if you look forward, Amazon's annualized earnings growth rate is projected to top 20%. They report tomorrow, so we'll see what happens with guidance and so forth. But I expect that e-commerce might be a little bit sluggish, but their cloud business might be the star of the day.
Cigna is your next idea. Why do you like this one?
Stepping back and looking at the overall economy, I think that when you look at healthcare companies, they tend to really be a unique performer during times of economic deceleration. They really provide a unique combination of defense and growth at the same time. And Cigna is no different from that. Cigna obviously is an insurer and a pharmacy benefit management company. They expanded their PBM or their pharmacy benefit management services quite greatly with their merger with Express Scripts in 2018. Today, it's one of its largest pharmacy benefit management contract is with a very, very reliable contract with the U.S. Department of Defense. In insurance, they're in the life, accident, disability, dental insurance products, and so forth. This year, they're executing a very shareholder-friendly $10 billion share repurchase plan. They're trading about 12 times forward earnings. Growth rate is about 11% on a go-forward basis, so certainly a value name. You're getting a 1.66% dividend yield, which is not too bad. They report again on August 4th. But again, stepping back, we want to be partly in some of these defensive names as the economy starts to shift through the cycle.
Okay, Suncor Energy. Why would this be a favorite among energy stocks?
Yeah, so as you know, Suncor is the largest integrated energy company in Canada. They're focused on developing the Athabasca oil sands basin. Their retail national distribution network falls into the Petro-Canada brand. Some of the recent operational accidents have really hampered the shares. They've caused it to lag competitors. Now the shares are down to the 200-day moving average, which I think is a bit of an opportunity for investors. The other thing that's happening is the potential sale of its retail business. That could unlock some significant shareholder value and boost up buybacks or dividend increases and so forth. Again, down to the 200-day moving average could be a pretty good support level. Broadly speaking, I think energy prices are going to remain pretty firm going forward over the next many years. There's still very steady global demand. Inventories remain low. And we see basically industry-wide underinvestment. We also saw Saudi Arabia come out and saying there's a cap to what they can produce on a daily basis as well, which is a bit of a surprise to the world in terms of what they said. It was much lower than what the world thought in terms of their daily production, their cap and their overall ceiling on production. On top of that, you're getting a 4.6% dividend yield on Suncor. So I really like this particular name. We own this amongst many energy names. Energy is one of our favorite sectors in the portfolio, and Suncor is one of the favorite names in the energy patch.
Is there a smaller energy name that you favor right now?
You know, a lot of our names are probably in the larger space, whether it be Canadian Natural Resources, Marathon, ExxonMobil. So they're all larger cap names. I'm more comfortable with some of these types of areas, some of these names with very, very strong management, the ability to control costs. Really, it's all about free cash flow, and you're seeing that in some of these larger names. And some of the smaller names, you might get a bit more leverage going forward. But, you know, I think some of the operations, some of these bigger names makes more sense to me.
And what about the global? You mentioned Exxon. What about the Shell or BP? Are you interested in those?
Yeah, we have Shell in the portfolio, Shell PLC. We've got ExxonMobil. We've got Marathon, Chevron, ConocoPhillips. So definitely it is our largest weighting in our client portfolios. And that's why we perform quite well, just given the fact that energy has really been the sole performer so far this year. If you look at all the different indexes, whether it be the TSX or the S&P 500, energy has not only been the only performer, but it's been a tremendous performer so far this year. Obviously, in June, we had a bit of a pullback, but this probably represents a bit of an opportunity going forward.